Bank of Canada rate announcement, June 4th. Now, almost all the banks are pricing in zero cut. So they're not pricing in anything. They're basically suggesting no cut to the rate. Out of the 6 largest banks, only TD thinks that there's going to be a quarter point drop. Everyone else thinks that they're going to hold rates.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello, and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson, joined as always by my co-host, David Warren. We're both mortgage agents, level 2, and we're here today. We have an amazing guest for you today, Brian Powell from Big Insurance, who we will introduce shortly. We want to just remind everyone, if you ever have any questions about real estate, mortgages, you're buying, you're selling, you need to get pre-approved, you're shopping, you're refinancing, you're renewing, you're buying a cottage, you can talk to Dave and I. We're here. So don't be afraid to reach out. Our contact information is in the description, and we're always available to help you. We just want to say thank you as well to our amazing sponsors, Big Insurance in Westboro, Gertin Poirier Avocat Lawyers, and last but not least, CENTUM. Very long intro, David. I apologize. How are you doing? What's going on?
I'm thrown off because we're recording on a Monday, which completely throws me for a loop. But good.
A Monday afternoon, nonetheless.
All good. Just to mess with our heads and our schedule even more.
Weekend was good, though. You had a good time. Good Italian Fest coming up this weekend.
Yeah, we got Italian Fest coming up. If you're in the Little Italy area, come by Santini Gallery, our gallery down on Preston, 422.5 Preston, and we'll have a link for tickets available in the comments or in the description for a paint afternoon. I wouldn't say paint night, paint afternoon, to get tickets for that, to learn from producer Sandra, who is an amazing artist, and she will be teaching watercolors to those that want to come out. So we'll have a link to that and more info in the bio of the episode. So come on down if you're in the area.
Yeah, if anyone hasn't been to Italian Fest, great time. They also have the Ferrari show, which is always a good time. All the local owners, actually probably not even local, probably regional owners come down and do a full rip on Carling Avenue. It's always a pretty entertaining weekend. So certainly check that out. David, our last episode where we had Mr. Paul Rushford on stimulated a lot of emotions in people, it seems. We had a lot of comments, more than any other show we've ever had. One says, why are the South and West Ends valued higher than the East End? I can never understand why someone would pay more to live in Canada than Orleans, except if your job's there, when considering how much more miserable it is to commute to downtown from the West End, both in the morning and afternoon with the sun in your eyes. Prior to LRT implementation, commuting on public transit from Orleans to downtown was a breeze and relaxing. I could comfortably get to my office in 30 minutes, free of parking and gas-guzzling car. With LRT, it's not as good, but it's still a lot better having a regular bus to downtown and train. In Canada, public transportation is horrendous to downtown. South End commuting is getting worse, and OC Transpo keeps removing bus routes to downtown from there. So why is the East End still undervalued, I ask? What do you think, Dave?
I think in the West, there, South and West is all the high-tech companies have all their offices. You got D&D, you've got RCMP, headquarters are all out there. There's some large government facilities out there for their head offices, and as well, obviously, like I said, the high-tech companies. So higher net worth or higher household income averages out there, which would obviously drive competition and pricing. And then also, historically, going out the 174 has always been a disaster from a traffic standpoint as well. And so I think that has inhibited some growth in the East End in that regard. But still great, established area. They haven't been building as much. It's not as building as much as in the West as well. There hasn't been as much new construction in Orleans historically than Canada. So I think the competition for new housing versus resale has also been not as much, not as many options. That's at least my take. And you're closer to Toronto for anyone looking to commute or have his family in Toronto or Kingston or Brockville, like being already in the West End or South End, you're quicker to get to those cities. You're not crossing the city to get to drive, obviously, to Toronto or Kingston, et cetera. I talked to somebody on the weekend. They live out there commuting to Brockville for work. It's an easier haul. So I think that plays into it as well.
Yeah, that's a good point, actually. That split, like the split at Bayshore, is probably a huge factor. A lot of people don't think. Even going out to Barrhaven, things like that, like you all kind of have to go that direction. So it certainly can save on that commute. The last two comments I wanted to read here, Dave, because they actually made me laugh in a good way. I appreciate everyone's comments. It says, some people avoid going to the circus due to their fear of clowns. I, on the other hand, loved the circus from a very young age and watched shows like this every week. Well, what are you seeing in the market right now, Dave? I wanted to touch on that quick again because I know everyone keeps hating on us and saying that we're pumping the market, but genuinely, it's crazy right now. Like, I have a client. This is just one example. Property listed at 300,000 in a desirable neighborhood, I will say, but the listing literally says as is, where is, septic needs work, electrical needs work, everything needs work, basically. Already has 2 offers. My client wants to go in. They already have 2 offers and are expecting many more. And this is, again, a property that needs extensive work, certainly not turnkey. Literally says as is, where is in the description, and it's still getting multiple offers. Obviously, this is a unique situation. But yeah, it's just one of those things. Like every client I talk to that's looking at homes, there's already an offer, or there's a competing offer, or they think there's going to be another offer. Like the market is very, very busy right now. So anyone who says it's not busy or is saying that like they think we're pumping the market or that we're inflating the market, like I honestly I can't remember a busier spring. Like it's extremely competitive right now, and every buyer I'm talking to is like sharpening their pencils. They have all their ducks in a row and they're still missing. So what are you seeing, Dave? Like let's at least give them two sides of a coin here.
I mean, no matter what, anyone listening on a regular basis, and a lot of these comments are just people that, listen to a 2-second kind of, clip, if you will, and don't actually tune in every week to the clown show, as that one guy said. Really all we can speak to is what we see around us. And yes, there's a lot of inventory in Ottawa. Again, I think a lot of those comments, some of them are also misconstruing where values are at, of looking at the Toronto and Vancouver market versus the Ottawa market, which is what this show is the Ottawa market. And what we speak to, we're not speaking about the Toronto market or anything like that. If you actually look at a chart from around the country for values, the value dip is really just in Toronto and Vancouver. Northwest Territories is up it was hilarious. They're up 20% in home price values. East Coast is up. It's all green basically in a lot of areas, not every area, but a lot of areas across the country. In our immediate market, same thing we've continued to see. A house on my street goes up, sold in 2 days. I'm downtown though. It's a single family home. I know somebody, I didn't work with them. They bumped into me as I was dropping off my son at daycare. They offered on it, and they were expecting to have to do $300,000 to $400,000 in renovations, and it still went 1 day on the market. Another client sent me an purchase agreement this morning. It's conditional, so I won't speak to the exact location or anything like that. But Barhaven townhome, mid 600s, sold over the weekend. First weekend listed, and that's in the mid 6s for a Barhaven townhome. These are all instances where they just show well, or they're in an area that is desirable. Now, when we talked about Canada, there's some stats that came out about, around Q1 and kind of a dive in. New mortgage originations jumped 57.7% year over year in Q1 of 2025. So again, this is nationally, this is all banks. Newer mortgage originations. So what that means is new mortgages, submissions to lenders up 57.7% year over year, Q1 2025 versus Q1 2024. Much of the activity is coming from refinances and renewals, not as much on, nationally on the, purchasing side of things, but it is kind of reflecting that, what we talked about, that great renewal coming out of the pandemic of those mortgages turning over, people looking for moving mortgages. And to that, where the activity primarily was Ontario, Alberta, and BC, of course. And there was an estimated 28% of mortgages switching lenders. So obviously, to what we've spoken about as well, is people don't just take your offer, look to what's out there for offerings in the marketplace. Kind of bring up both of those to speak to kind of what we've been saying is, it is an active market in different areas of the country, Ottawa being different, but that there is huge mortgage volumes up across the country in every market. And this is coming from Equifax. This is not coming from David and Paul. This is a stat directly from them and what they're seeing. First-time homebuyers, according to Equifax, first-time homebuyers returned to the market with activity up 40% from Q1 2024. So Q1 2025 versus Q1 2024, first-time home buyers are coming back to the market and up 40%. So obviously, again, showing that first-time home buyers and other buyers as well. This is just first time, but people coming back and looking at purchasing homes. So both of those are, all of those are important to keep in mind. It's not just us talking about, quote unquote, pumping the market or anything like that. It's really, we're just speaking to the figures that, are out there from the main reporting agencies, from the lending institutions, and then what we're seeing week by week from our clients, which is a pretty broad group of client base, first time home buyers, commercial, resellers, investors, the whole, gambit. And, being in the market on daily and sitting at our desks for 9 and 10 hours a day, looking at stats and what's going on in the market. This is really just, a lot of it is just what we're seeing.
Yeah. And it's just us, David. We come here, we just show up and we provide information, and we do it for you, the listeners. I wanted to introduce our amazing guest today, and sorry for making him wait so long, Brian. We just went off on a few tangents there. Brian Powell is here from Big Insurance in Westboro. He is, would you, insurance broker, is that the right title, Brian? You can probably introduce yourself better than I can.
Yeah. Well, thanks for having me, Dave and Paul. But yes, I'm a broker. I'm also the managing partner of Billiards Insurance Group Westboro, and really appreciate you having me on today.
Absolutely. So we wanted to bring Brian on. We often get asked a lot of questions about insurance, especially with the mortgages. Like I had a friend call me last week, and I'm pretty sure he called you too, Dave, about the different types of insurance. Like they were being offered mortgage insurance, and they weren't sure. Like, is this life insurance? Is it disability? Is it default insurance? Is this like title insurance? So we wanted to kind of break down quickly just the differences between the three, and then maybe you can touch on specifically like what type of coverage you can offer, I guess, or what type of coverage you look at, I guess, or how you approach like a first-time buyer, for example, just so people have an idea as to that. So the first two types of insurance is very quickly. Default insurance is simply if you're putting less than a 20% down payment, your bank, your lender is going to insure the mortgage itself against default, meaning if you decide or are unable to, not decide, but if you're unable to make your payments, then the bank essentially gets all their money back. They're insured against default. So if you default, they get their money back. They're taking on very little risk. That's default insurance. There's also title insurance, which is mandatory. You would have that registered at your lawyer's office, and this just basically protects you and the title of your property against mortgage fraud. So someone, impersonating you, trying to access equity from your property. And then last but not least, we have, life and critical illness and disability coverage, which can go along with your mortgage. So Brian, how do you approach those conversations with home buyers, and what sort of things are you looking at to make sure you're giving them the most tailored solution?
Yeah, great question. So first, I find out what type of property that they want to insure, whether it be a townhouse, single family home, multi-units, up to sixplex, let's say. We find out where this property is and what's the intended occupancy of the property. Are they going to be living in it? Are they going to be having a business out of the property? And that all determines what kind of coverage that we could offer them. It also affects who's looking to insure that property. Some insurance companies don't want home-based businesses. Some companies may not want properties inserted in postal codes on their books if they've had a large loss in that postal code. But when I'm trying to help out specifically first-time home buyers, educate them about what this policy covers, we always offer in our brokerage an all-risk policy or comprehensive policy that includes guaranteed home replacement costs, which is a big thing for lenders. They want to see either the value of the dwelling is equal to the mortgage amount, and if it's not, which is typical in the Ottawa market, they want to see that guaranteed home replacement cost endorsement on the policy. One thing I do like to educate our clients with is a home insurance policy is there to protect you when something sudden happens to your policy, either like a windstorm, fire, or backup. Insurance policies don't cover something that's been an ongoing maintenance issue to a property. Sometimes we see calls on that, and right in policy wordings are we don't cover maintenance issues on a property. So really try to educate new home buyers on that piece.
I've definitely been seeing a lot more lenders require and demand that guaranteed replacement cost. Is that something that you've been seeing like this past year as being like, I feel like any type, not every lender, but
Yeah.
I've been seeing it more and more than I've ever seen before. Is that something that you're seeing as well? Or is this just like a
Not 95,
randomly?
Yeah, 95% of the time, our policies automatically cover it. Sometimes I was actually working on a file last week for a heritage home built in 1931, and heritage homes have a lot of requirements if a loss happens to rebuild according to the City of Ottawa bylaws and so forth. So on this property, we weren't able to get guaranteed home replacement costs, but the value of the building was 1.8 million and the mortgage is only 400K. So we were able to get around the guaranteed home replacement costs because the value of the building was so much higher than the mortgage.
I was going to say, I've run into that a few times with some of the big banks with their replacement costs. They actually indicate to the lawyer that it needs to be the full value of the home, not the actual replacement cost. And it can create kind of last minute hiccups because the lawyers basically, well, that isn't the coverage that we have. We have a replacement for basically the cost to rebuild the home, not the full price of the home, right? Like the full value of the home. So is that what you're saying, that your policies typically will cover the full replacement value or the actual value of the property itself?
The full replacement value of the house, because our calculator doesn't take into consideration the value of the land or the market conditions. So in Ottawa, typically the rebuild will be $150,000 to $200,000, usually less than what somebody purchased the home for. But let's
Yeah.
say you go to like a smaller town, let's say like Cornwall, the rebuild will typically be higher than the value of the home. So
Interesting.
the banks don't look at the market conditions. They just look at the dollar amounts.
And would you say kind of the numbers that I was giving earlier of so many properties being up for renewal? I would imagine that obviously when people are up for renewal on their mortgage, this is when their insurance policy is likely up as well, as typically the anniversary of their mortgage, I would imagine, in pretty well every case. But are you finding a huge influx this year of people also that are up for renewal now shopping because it's prompting them because
Yeah.
they're up for their mortgage renewal?
I find the last year and a half to 2 years, with everybody's budgets tightening, people are becoming more, where maybe if prior years, if a 10-15 month increase happened, people would just ignore it or assume just, oh, it is what it is. But as people's budgets are becoming tighter, people are saying why or asking us to requote them, which we're okay with doing. Luckily with us, we have 15 markets to quote. So if something isn't great with one market, we'll just bring it to another market and usually have a solution for them. But we are requoting a lot more people this year.
I just had a follow up to that one because as I understand it, it's not worthwhile for somebody to look to switch insurers every year. What's that timeline like of the ideal time frame to kind of stay with your existing insurer versus start shopping or looking to get quoted by another?
That's a great question, Dave. I typically say let's requote every 3 to 5 years, unless there's been a drastic change in either premium or coverages offered. But insurance companies don't like to see when people jump year to year, because if someone changes year to year, they're not profitable to the insurance company. So they like to see 3 to 5 years, and is a good time to reshop your insurance.
Yes. So I guess right now with so many mortgages coming up for renewal, a lot of those people likely haven't shopped around since when they got the home in 2020. So that would
Exactly.
be an ideal time kind of thing.
Yeah.
Are you trying to grow your mortgage business? CENTUM has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with CENTUM. Learn more at joincentum.ca. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most.
So Brian, this is a question this is a personal question I've always wondered. So and you can probably explain it much better than I can. How are premiums calculated, like client to client? How are they calculated, and what variables do you see customers underestimate? Like, what are they thinking isn't going to matter, and it actually does?
Yeah. I'd say the biggest thing that people don't take into consideration is prior insurance. Some insurance companies won't even offer home insurance if you don't have prior insurance. So I really recommend for everybody renting out there to get tenant insurance. Insurance companies love to see that somebody was responsible and got insurance for their place while they're renting. And then it helps when we're getting insurance rates. But then to your second question, how is rate generated? Postal code's a big thing. Age of the house. Most insurance companies do what they call a promotional hit to your credit. So if it won't show up on a credit report that you guys pull when applying for a mortgage, but it just checks to see how people pay their bills. And people who are more fiscally responsible typically will get lower insurance on their properties. And then claims history in that postal code will also determine rate. Age of the home, how the home's heated, are some other factors as well.
You said that's called a promotional credit check?
That's what the insurance companies call it, or a soft credit check.
Yeah. We need
You
some
guys probably
promotional
know.
credit checks for our clients. Our credit sensitive clients would love a promotional credit check. So another question I have just about that then, like about premiums and how they're factored in, like how should someone balance? Because there's always like a higher premium versus less deductible. Like, how do you advise people on how to balance that? Like, is it better to have the lower deductible and like less coverage, or like, well, how do you kind of guide people through that?
So on deductibles, I find currently $1,000 deductibles are your best value. Increasing them to $2,500 may only save you $150 a year. So if you have to make a claim within those first few years, you're not going to come out ahead. And typically, anything under $1,000, we suggest it's best that you just repair the house yourself, because too many claims or too many such a high frequency, can increase rates, or it might not make you eligible for a certain insurance market, which may put you into a high risk market, and you'll end up paying more in premium than a small claim. You might have a payout on a small claim.
And I would imagine that kind of parlays the same way into auto coverage as well.
Yeah.
Like from a deductible standpoint, and as well, obviously for repairs.
Yeah. So for example, last week I had a client whose hot water tank, the bottom gave out, and they woke up in the morning with about an inch and a half of water in their basement. So they called me. I called a restoration company that we work with. He was out at the property within an hour, and with his expertise, he advised the client there was probably only about $1,500 worth of damage. Their deductible is $1,000, so they'd only would have recouped about $500. So we advised them it was best that they didn't proceed with a claim. And that's the benefit of working with a broker versus an insurance company where you're calling a 1-800 number, where that claim would be logged right away. Whereas with a broker, we can have a conversation and determine what's the best course of action for you.
Whether that info needs to be passed along to the existing insurance company, right?
Interesting.
So in a case like that, if somebody's dealing directly with their insurance company, like you said, those inquiries are logged on their profile. Even if they don't make a claim, would that still come back to haunt them on
It could, yes.
just because then they know that there's been past water issues in the basement kind of thing?
Exactly. Or they'll want pictures to show how you fixed it and so forth. Or if you've had multiple inquiries, they might not want to do business with you anymore.
Brian, we're seeing a lot of shift in our industry switching over to, even if it's just like, marketing systems, CRMs, like AI is obviously becoming much more entrenched in every industry. How do these sorts of emerging technologies, how are they influencing underwriting and the customer experience on the insurance side of things?
That's a great question. We've actually implemented a lot of AI locally at our branch just for administrative tasks. There's a couple companies that are really using AI. Me personally, I still prefer to deal with underwriters that I can have a conversation like this and talk out a risk. And I don't think you'll ever lose the element of real people when talking about different risks. We're just using now AI to guide ourselves to make better decisions about the risk. I don't know if that answers your question, but
yeah, no, it's great.
Like our AI program is more on the auto side right now, and it's more trying to catch fraud and making sure that we're inputting everything off the reports properly. And then when we don't input something properly, asking us why.
Just kind of pivoting on questions, but is last time you were on, we were kind of talking about different types of plumbing, different types of wiring, what a lot of insurers don't like, but there being even if it's poly B plumbing, that you still have insurers that will do it. For any of
Yep.
those realtors out there that are listening and having issues, or even knob and tube, that there are ways in which you can still get it done. There's probably timelines in which you can get that remediated after closing. Is there anything that's come up, in the last probably 6 months, I would say, or so since you last on, that are kind of hard stops for lenders or for insurers rather, or that you've seen come up that are in that same breadth of like the poly B plumbing or the knob and tube wiring? Are there any kind of issues with homes that you're seeing as kind of a broad stroke where insurers are like, if this is within the home, like, a lot of insurers are not, underwriting that?
Oil tanks. Certain oil tanks insurance companies don't want, especially if they're in the ground or outside. Like the safest place is an interior oil tank that's not below ground level. And when I say ground level, I don't mean in the basement, but I just mean like actually like a hole dug to put it in. That's probably the biggest thing outside what you already said there, Dave, would be oil tanks.
And then so on that, as I mentioned about the poly and the knob and tube, because I know there's a
Mhm.
lot of issues and it comes up pretty regularly of, if it's got it, a lot of insurance companies will just say, no, we can't cover it. And, and people are just kind of used to going to, their TD
Yeah.
insurance or wherever, like directly, like you mentioned, as opposed to through a broker that can shop it. If somebody is buying a home and those are there, those types of, materials, whether it be the type of wiring or the type of plumbing, is it something where most insurers will provide coverage as long as you can provide proof that it was remediated shortly after closing, or is that only with certain insurers?
That's a great question. It actually goes back to my topic or conversation earlier about why it's important to have tenant insurance. If we stay with the same company, so let's say you're with company A and we're going to get a home quote with company A, they're more likely to give like a 30 to 60-day follow up because they have a track record with you. Whereas if we're trying to go with company C who doesn't know you, they're not going to offer a 30-day or 60-day window of grace. Sorry. They'll so it's better. That's why it's better to have previous insurance because they're going to be more willing to work with you because you don't have an
Got it.
established
They actually know, kind of have that. Yeah, they have that history
yeah,
with you that you're,
yeah.
regular, not making claims, you're paying your bills, and which is kind
Eh,
of
eh,
gives them
eh,
confidence that you are actually going to go through with this, remediating the issue.
You nailed it.
Okay. Good to know it, because I get calls all the time from mortgage agents, realtors, clients, where things of that sort kind of come up and they're having issues getting coverage, or think it's, a non-starter for even looking at a home or something like that. And I always try to kind of calm their nerves that there are
Yeah.
ways from a financing perspective under a purchase plus improvement, so you can also, get it done after closing and have the coverage. But then on the insurer side, as you're going up and there's notes on an MLS listing, and you ask your questions of
Yeah.
what type of electrical or plumbing there is, and those can be issues even if you are planning on doing the repairs under one of those programs anyways.
Great question, David. Great question. Great answer. I wanted to, Brian, this is kind of, I have to change gears quickly because this show's coming out Wednesday, and I know we're cutting it to the end of the show here, but Bank of Canada rate announcement, June 4th. Now, almost all the banks are pricing in zero cut. So they're not pricing in anything. They're basically suggesting no cut to the rate. The only out of the six largest banks, BMO, CIBC, National Bank, RBC, Scotiabank, TD, only TD thinks that there's going to be a quarter point drop. Everyone else thinks that they're going to hold rates. There was an article today in the at Canadian Mortgage Trends. I'll read you a couple highlights here quickly. So it says Canada's economy delivered stronger than expected growth in Q1. You kind of led off with that, Dave, with GDP expanding at a 2.2% annualized rate, matching the pace of Q4 in 2024, despite concerns that tariffs would curb activity. This uptick was driven largely by higher imports and exports of tariff-affected goods such as automobiles, oil and gas, industrial machinery, equipment, and parts. Some analysts caution that part of this headline strength may reflect a one-off pre-tariff buying surge masking softer underlying trends. It's interesting. Before the Q1 GDP figures, nearly all of Canada's major banks had been forecasting a 25 basis point rate cut by the Bank of Canada in June, with TD going so far as to project a 50 bip rate cut. In light of the recent data, however, most of these institutions have reversed course, aligning with Scotiabank's earlier call for no change. Scotiabank economist Derek Holt argued in a note titled, "No way the Bank of Canada should be cutting," that underlying inflation pressures remain too elevated, particularly core inflation, and that the full impact of tariff-induced supply chain shocks has yet to materialize. As a result, Bank of Canada appears likely to hold its policy rate steady at 2.75 at its upcoming meeting rather than resume easing. So I would probably argue until the numbers came out last week, I think it was almost like a foregone conclusion that they were going to drop it. And now, well, as we just read, like most of the banks, most of the economists are suggesting that they'll just hold the rate. Is that what you're thinking as well, Dave? Is that what you're reading, you're seeing?
Yeah, yeah. I am seeing that same kind of percentage odds in the bond market. I'll be interested to see. I'm headed out of town actually I'll be listening to Scotiabank's chief economist. I believe it's tomorrow afternoon. So I'll be curious to hear what they have to say and what their talk is, kind of on for a go forward for what they're seeing and going to be forecasting for the remainder of the year. So I'll be able to bring those insights back for next week's episode at least. But yeah, I think kind of centered around where the inflationary numbers are at. Still some uncertainty around how the tariffs are going to affect things. Certainly, I think they're kind of wanting to not make too quick a jump to drop things while they're kind of waiting for some of these aspects within the economy to kind of ripple through. As we know, it's not something where changes are immediate. I think the comments that you just read of the pre-tariff buying from a lot of companies is very much true. You've got both ways. You've got people that bought a ton pre-tariff announcement, especially in the auto industry and things like that, and you even hear it and see it on even the dealerships ads that they haven't had to buy new product yet from the States. And so, all their pricing is pre-tariff pricing, and that they are hoping not to have to kind of dip into that. So I think they will be, as we roll through the next couple of months, it'll be interesting to see if those spikes are due to that or whether it's long lasting or not.
How about some mood boost, gentlemen? Should we slide in? It's about that time. Brian, you've been here before. You know the deal. We always end with some mood boosts. Try to lift everyone's mood, especially with the Bank of Canada's rate hold. Here we go. I celebrated a birthday on Friday. Okay, it was my 42nd. Still feel like I'm about 25. My brother had some birthday-themed mood boosts. So here we go. Number one, what did the pirate say on his 80th birthday? Aye, matey.
Wow. I mean, it's not bad,
Yeah.
But wow.
Number two, why don't skeletons have birthday parties? Because they have nobody to celebrate with. Nobody.
Mm-hmm.
Number three, last but not least, how can you tell if a birthday cake is sad? Easy, just see if it has tears. No? Wedding cake?
Wow.
Brian, thank you so much for coming on. I know we kind of hit you with some questions there you probably weren't expecting. So I appreciate your expertise and your professionalism. And as always, your insights are valued. And we thank you as well for you and your brokerage's amazing sponsorship of the show. On that note, thank you to Big Insurance in Westboro for your support. Also to Gertin Poirier, Avocat Lawyers in Beechwood. And last but not least, CENTUM. We appreciate all of the support. And thank you, everyone, for listening. New shows are released every Wednesday, 10 a.m. And be sure to follow us on all of our socials for exclusive shorts and content. We'll be back next week. Check out Italian Fest this weekend. Santina Gallery.
Thanks, guys.
Deuces.
Bye.